Hi everyone, so today I'm going to be covering Alaska Airlines. This is another stock request video. I've covered United, American, and Delta, and now Alaska. This is one of the better run airlines in the United States, from the United States. So let's get right into it. Let's see what's going on with the company, and then we'll go through the financials of it. Alright, so I'm going to share my screen as usual, and let's take a look. So, as you could tell, they had a pretty decent earnings for Q2, actually. Earnings came out July 23rd, and they did beat on EPS and revenue. Revenue came in at a total record $3.7 billion, so they had an increase of 2%. Adjusted EPS was $1.78, so that did exceed company guidance. However, this represented a 30% decrease compared to the second quarter of last year, 2024. So you have to keep in mind on that. And this is just another reference of why I don't like airline stocks, nor does Buffett. It's because of this. Total operating expense increased by 33% right here to $342 billion. So this is the problem with airlines and these types of companies in general that have a lot of capital expenditures or CapEx. They have these operating expenses that are very and always ever increasing year over year, and it's very problematic. So it's very hard to have a good free cash flow growth generator on companies like this. So you just have to be aware if you are interested in these types of companies. All right, so if we take a look also at the guidance here, Q3 2025, the company provided a third quarter adjusted EPS guidance of $1.40, which includes an anticipated 10-cent impact from a July IT outage, and then the full year 2025 anticipates full year 2025 adjusted EPS to be greater than $3.25. Because of this, the stock price did decline 4% after hours, and analysts are scared or worried of future capacity adjustments and broader market conditions. Of course, with Delta, American, they've all still revised down a lot of their estimates. That's due to tariffs, that's due to a lot of other things. Slower demand, slower consumer demand, not as many people are traveling this summer as they anticipated. All these things factor into it. So the wars, of course. So all these things factor into it, and just something to be aware of if you're interested. All right, so the next slide I'm going to show is the free cash flow, because the finances, of course, are probably the most important part of this. 2021, $738 million, now $200 million. And this is the problem with airline companies, super cyclical, and right now they're on the current downtrend overarchingly. And you got to be very careful of this. They started out pretty decent, and then they went negative for 2 years. They went positive again. Now they're a little bit more positive, but could go negative again because they did revise down their earnings. And we're going to see here in Simply Wall Street, let me go back to future growth. Give me a second. I will load up on the screen so everyone else can see. Future growth here is right now, well, here you have 200 million, which I just mentioned, but they have, this is a little bit more updated than Yahoo Finance. This is negative 8 million. And if we check by 2027, it's going to be positive 463 million. So yeah, there will be growth in Alaska Airlines. It is a cyclical industry, airlines in general. So you need to be aware of that. So it might be a good trade. I don't know about like a long-term investment, a 5-year, 10-year investment, right? If you check the financial health of the company, it's not great. Debt, super high. Equity, lower. Cash, even lower. And the debt's increasing. The equity and the cash is decreasing. That's pretty much what you don't want to see. You could even see it here, the red. A lot of debt, and this is just the nature of the business. You can't really do anything about that. They just have a lot of capex, so naturally they're going to have a lot of debt along with it. If we check my DCF on it, my DCF is going to say it's 92% undervalued. This is based off historical, and I think this is pretty unrealistic because they already revised down, so I would go by Wall Street forecast. If we check Wall Street forecast is going to say it's 73% under, but again, you have to keep in mind that it's a little bit too, I think they're valuing it too low. Or I think it's not going to grow as the same rate as they think it will. I think it'll be more in line with what Tipranks is going to say, which is about 26 to 30% growth. And we're going to see that right here. So Tipranks is saying that 6 buys, 1 hold. It doesn't have a strong buy. 26%, 26.5% upside. Great, trading at 51 bucks a share. Great, low of 49, average 65. So I think if you're interested, you buy below 49. My personal opinion, and then But generally, I would say you should not buy these businesses. I think there are better opportunities out there. But if you're interested in airlines, this is a decent company as well. All right, thank you, everyone.